The government shutdown has officially entered its second week. Congress has ensured hundreds of thousands of furloughed federal workers that they'll get back pay once the government reopens. But at this point, it's unclear how long paychecks will be delayed or how much of an impact the shutdown will have on the economy. In terms of the economy as a whole, Bloomberg reports the cost of partially shutting down the government comes at $300 million per day. This according to the global market research firm IHS. That's $1.6 billion per week. And while the total impact is difficult to measure, it's expected that the longer it goes on, the more devastating the shutdown will be to the economy. So how does the government shutdown compare to other disasters? Well, if it goes on for more than 3 or 4 weeks, it could cost the economy about $55 billion, according to Moody's Analytics. That puts the shutdown price tag in the same range as some natural disasters. Take Hurricane Sandy, for example. The superstorm that ravaged the eastern seaboard is one of the largest in the Atlantic on record. It cost an estimated $68 billion in damages. Hurricane Katrina in 2005 was one of the deadliest and costliest natural disasters in U.S. history. It incurred a cost of $108 billion in damages, according to the National Hurricane Center. And the BP oil spill that poured millions of gallons of oil into the Gulf was one of the worst offshore oil spills in U.S. history. It cost the company over $40 billion to clean up the mess and compensate victims. And the ongoing drought in the South is plaguing farmers and the local economy. Texas is feeling the worst of it, suffering an estimated loss of $7.2 billion in crops and livestock. Just a few examples there of natural disasters that took a toll on the economy. And if Congress remains deadlocked and the shutdown drags on, the economic impact could be on par with disasters like these. And now the clock is ticking to the next big deadline. On October 17th, the deadline hits for the U.S. to raise the debt ceiling or risk running out of money to pay its bills. Many economists predict the economic consequences of failing to reach a debt ceiling deal would be much more serious than this current government shutdown. In Washington, Liz Wall, RT.